There has been significant capital market development in Asia, specifically Malaysia. Today we're going to be speaking about derivatives and how those markets have been developing. With me here today is Azila Abdul Aziz, Chief Executive Officer of Kenanga Deutsche Futures in Malaysia. Thank you for joining us. You've traveled a long way to be here.
Thank you, Matt. It's a pleasure to be here.
So Azila, you were here in 2011. We spoke about the capital markets development in Malaysia, and there were some pretty lofty expectations going all the way through to 2020. But since that time, we're in 2013. What have we seen? Has there been sort of the expectations that you were thinking back then?
Since the day that we have discussed about Malaysia, there have been quite a very good progress going on in the overall Malaysian markets. The capital market size, I believe, the projection for growth remains. And as far as Malaysian derivatives is concerned, yes, we have seen quite a good percentage of growth in 2011 to 2012. There was an increase of volumes of more than 37%, followed by another 14% from 2011 to 2012. And this year alone, I think we are going to record another new record volumes in 2013 with roughly about 10.8 million contracts traded. So having said that, yes, there is good progress, and it is on track as what we have discussed back then.
So how about in terms of foreign investors? We were both at the FIA Expo in Chicago last week. Obviously, you're here. There was an FT article talking about at the Expo some of the major leaders from some of the Asian exchanges talking about how they're starting to see more foreign investors enter their markets. Are you starting to see some of the same in Malaysia?
I would say one thing which is distinctive about Malaysian derivatives market is that it has managed to attract quite a significant percentage of foreign interest into the country, into the market. In both of the two most active contracts, more than 40% are foreign. And these are foreigners. These are foreign names.
The two most active contracts being the
apologies, index futures contracts, which is already CFTC approved back in 2011, and also, I guess this contract needs no introduction, the palm oil futures contract.
And is there a certain investor type that you're seeing greater interest from here in the U.S.?
Yes, we have seen that, especially after the tie-up, and especially so after market access has been enabled. As you know, Malaysia is 100% voice execution prior to 2008 and 2009. But right after that, it creates a lot of visibility, and we do see a lot of banks, foreign banks, and which behind them comes the hedge funds, the CTAs, and also some of the high frequency type of customers are already participating. This is totally a different landscape than what we saw back in probably the previous year, where foreign was active back in 2007. But then again, access was not permissible then.
Access was not permissible. I think that's the interesting part. So as we move to more electronic markets and the development of electronification of markets, which has been occurring here in the U.S. and in Europe and in other more developed Asian markets, how does that change when you say there's limited access? Like what is the challenges for a U.S. investor accessing perhaps the
Malaysia? Okay, I would say that now other jurisdiction does not conform to CFTC ruling, so they can now access directly, given that the market has been enabled Open API. But for American clients, it is still pending CFTC approval. Okay. So with that, it doesn't mean that American clients cannot trade this market totally. So if you ask me now, today, if you're an American client and would like to access BMD, there are two ways of doing it for now. Number one is that you can call directly some of the Malaysian brokers, whom are already CFTC registered to 30.10 brokers, or two, to point that connectivity via other jurisdiction. That does not prohibit access.
And have we been given any timeline in terms of when the CFTC might approve the DMA access for U.S. investors?
At this point, we have no idea, but I guess that is something that the exchange is working towards, and hopefully we would see some good news. But the point is right now is to create that awareness.
So for people who don't know, Kenanga remains the top broker by market share in the Malaysian markets, at least for derivatives. What are some of your opportunities? Where do you see the growth for your firm over the next year?
Our focus will still remain to attract more foreign into the country. Also, the fact that recently our sister company, our holding company, which is the Kenanga Investment Bank, has actually done a bit of a tie up with another investment bank in Malaysia, and that results it having about 32 branches, network branches in Malaysia, of which 29 of that 32 branches are able to trade futures. So with that, our another area that we want to focus would be to also promote derivatives to the Malaysian retail or domestic clients, and that could actually create a better liquidity for the market as well in general.
So it sounds like education and getting clients on board continues to be a major focus for the Malaysian derivatives market.
That has always been an area of a target for ourselves, given that we are at the start of an early stage of growth. The momentum has to continue.
So stay tuned to developments of the Malaysian derivatives markets. They're making good headway, and we appreciate you coming in and giving us another update since you came in 2 years ago. I'm hoping to see you maybe perhaps a little sooner.
Thank you, Matt.
Time. You're welcome. And this is Azila Abdul Aziz from Kenanga Deutsche Futures. I'm Matt Simon, Senior Analyst at TabbFORUM. Thank you very much.